So let's go ahead and get started. Happy Wednesday. Good afternoon. The sun is shining here in Pierce County today, everybody. I am Candace. If we haven't met, I think I met everybody on this call. But we are right now going to just kind of go over getting buyers to home base. I think it's a big struggle that says buyers agents are having right now. And so want to just go over some helpful tips and see if we can help you all win some offers. So go ahead, Shannon, if you can, and to the next slide. So the multiple offer madness, what we have going on right now, this is common. Have you all seen this letter? On behalf of the sellers, I want to thank you for your offer on their home. With over 30 showings, they received 17 offers that were solid and well thought out. They reviewed every offer as it came in Friday, Saturday, and Sunday. Last night, they saw for the first time the offers that came in on Monday. They reviewed each and every offer, nearly 3 hours to reach their decision. Truly appreciate all the thoughtful offers and wonderful letters that were sent. They were just in the buyer's shoes in December and had an acute understanding of the gravity of their decision. After working at it diligently, they have selected the best offer to move forward with. They truly understand the disappointment and wish it felt better to send this note. They wish you and your client strength and strong persistence in this challenging of markets. Thank you again for your interest in the property. I'm pretty sure if you've written an offer lately, you've seen something similar. Which is nice. And I have lately, to be honest with you, because I've written more offers than I've liked for a few clients. However, I'm capturing these and sharing some of it with my clients just to make sure they get feedback and realize that, you know, we did the best we could. We were up against 17 offers. Sometimes getting that feedback and sharing it with your clients is really helpful, and just kind of keeping them rolling. They know that they're not alone. It's kind of across the board. It really is across the board. All right. So when before you even start, and I believe that now more than ever, it's no longer the days of, hey, Candace, I just got my pre-approval. I'm pre-approved for 500,000. Let's go shopping. No, no, no. It just is not a good practice to just take off. And I hope that you all are having buyers consultations and being able to be upfront, explain the market, talk about what they're looking for, understand where they are pre-approved. You know, if they're pre-approved for 500,000, depending upon where they're searching, they may not want to be looking right at homes at 500,000. So having those upfront consultations, understanding what you're working with, being really in tune with their lender now more than ever as well. Have your buyers get a love letter ready. Have them prepare that letter. I know from time to time, they're not always accepted. And I've seen quite a few listings where it says no in-person presentations or anything to that sort. But if you don't see that, there's no harm in doing it. Just be aware of fair housing guidelines. You probably don't want to have them sending pictures and, you know, talking about I'm a single mom or different things like that. But a love letter specifically speaking about the, you know, what they like in the home is, there's no harm in that. Provide your buyers with a market analysis. So if you're going to be sending an offer, give them a market analysis, not one from 6 months ago, because we are definitely already in a different market since then, but a market analysis. Show them what the houses are going for within the last couple of months. That way they know. I have even taken it as far enough sometimes to print out a sold listing that maybe sold a few weeks ago that's similar and in the same area, and show them what it listed for and what it actually sold for, just so that they can see just that upfront transparency that, you know, there's what I'm saying, I am the expert and I do know what's happening in this market. Build the rapport with the listing agent. So in presenting your offer, talk about your buyer's financing, ask about the offers, build that rapport also with the listing agent as you're getting ready to present your offer. Try, make the phone call, send the text message, send an email. Ask if there is an opportunity to meet and present. I think that might be a little difficult right now when you've got 17 offers on the table, but just asking doesn't hurt. Research the listing agent. I don't know if any of you have ever done that, but it's something that I do all the time. Understand who you're working with. Understand their strategy on a typical listing. Do they price high and then lower the price, or they price low and come in with multiple offers? What did the most recent listing that they sold, what did that look like from beginning to end? If you can pull that information up and paint a picture. So you know who you're working with. Are they a newer agent or older? Not older, excuse me, a newer agent in the industry, or somebody who's been around a long time and does 100 listings a year. Clean offers are pretty important right now, and that's everywhere. At one point, we were talking up north, King County, now even for those that are Kitsap, you name it, Thurston County for that matter, there is multiple offers everywhere. And so during your offer is not normally the time right now to be asking for furniture, asking for the home warranty, and also seller contributions. And we should definitely be tightening timelines for any contingencies that we may be using. Escalation versus highest and best. This is something I was having a great conversation with another agent yesterday, and kind of just going over. I think it's really important after every offer, even when you don't get it, to just kind of review, what could I have done better, and then move on. Discuss that with your buyers. Escalation versus highest and best. If the house is listed for $650 and you make that offer for $650 and decide, you know what, we're going to go ahead and escalate it to $750, which I've seen this. And then I have another offer that comes in, and the other offer is actually, let's say $730. Who really had more skin in the game at that time? Which offer am I going to really look at? Wow, this person really went all the way. Instead of tiptoeing up to this price point, I'm probably going to pay more attention to the one that really went with the highest and best. So think about that, and share that with your clients. Let them know, if this is where you're willing to go, maybe you might want to just go there. It's that kind of market right now. Having those conversations is so important. Financing, can they go non-contingent? I don't know if you've seen a lot of contingent sales right now, but I haven't. Maybe one or two, and these are homes up in the millions, but even the homes that are, over $1 million right now are having multiple offers and bidding wars as well. If they they have to go contingent, they really might want to think about some other options, which we'll have Sam get into some other options that may be available as well. But selling their home first, seeing if they do qualify for both. Maybe they might qualify to have their current home and be purchasing another. Do they have cash? What kind of cash do they have? What are they working with? Have they double apped? So that's making an application with more than one lender and being able to share that with the listing agent. These guys are really pre-approved. They're double apped. They're underwritten approved. So they've gone through underwriting. A lot of times what that means is they can close pretty quickly. So they've done everything, brought in the information that's needed, and gone through underwriting of the bank or the company that's doing the financing. And so the next step is really just getting the contract, doing the appraisal, if any, and off to close. And so those normally can happen 21 days as opposed to our standard 30 days. So really digging into financing. And like I said, we'll get into that a little bit more. Double down on the earnest money deposit. It's been typically 1% of the purchase price, but maybe consider, especially if they're putting a large amount down, maybe consider 2 to 5% earnest money deposit if they have it readily available. I am telling all of my clients, how much are you going to be putting down on this property? If it's, you know, and if that's a decent amount, some of them are putting down 10%. Hey, make your earnest money closer to that, you know, that amount. Timing, quick close, that goes back along the lines of underwritten approval, if that's possible, but 30 days or less. But also digging in with the listing agent and finding out, what does the seller need? Because, you know, sometimes it's not a quick close. Sometimes they need possession or a rent back. And a possession or rent back that's no cost to them. That's been very popular. I've seen it quite a bit. Do they need the long closing or do they need a quick closing? If it's a vacant home, a lot of times they could care less. But at the end of the day, I've also heard a lot of agents say to me, yes, the home is vacant and quick close is great, but this seller wants highest and best. So it's really, what does the seller want? And us doing that extra work to find out. Let's see here. And next slide. So the contingencies. And so consider shortening the different contingencies that we have. The title contingency. Sometimes you've got preliminary title that's already sitting there in supplements. Form 17, waiving the Form 17 contingency, basically stating that, you know, we're not going to revoke based on the items on the Form 17. Financing, consider shortening or waiving the financing contingency. Understand and make sure your clients know what these things mean, but different contingencies are there. And the more we have, the harder it is, especially when you're competing. Inspection, feasibility, shorten, consider waiving as is. Another one that's been really popular is not as is, it's having the inspection, but it's a pass or fail. It's one that I recently, actually just yesterday, won on a pass or fail inspection. And what that is just saying that we're going to have the inspection, but we're not going to ask for anything. We want to make sure there's nothing going on in the areas that we cannot foresee. So under the house, in the attic. Outside of that, you know, foundation, something out of the normal. But outside of that, we're going to take it as is. But we want to protect ourselves and still have that inspection. So looking at a shortened inspection time frame, waiving it, taking it as is, or doing a pass or fail. If you are buying as is, please use the Best Choice Realty additional clauses. I don't know if you all were able to listen to Monday night, but we have a new form to help with offers. And so we'll make sure, think that everybody has received that, should be emailed and being mailed to you. We also will have the video on our Umbrella Learning YouTube channel. And then appraisal, waive. Sometimes our clients are putting down enough that the appraisal can be waived. And so that's where we're getting really connected with the lenders and you know, understanding where they're at. Sam is also going to talk a little bit about sometimes there's money that's built into their offer, into their approval, where they can actually use and are able to have additional down in the event of low appraisal. So Sam will go into that. But the 22 AD, the additional down, do they have some extra cash that if this doesn't appraise, that they can bring to the table? And this is all the things that you really want to be going over on with your clients and your buyers consultation up front. Do not go out running with just a pre-approval, and get the feedback, because we're all losing on offers, but get the feedback from the agent and find out, where we're at, and be open to sharing some of that information with your clients. So it eases them a little bit and it helps them get more skin in the game. Sometimes that is a challenge with our clients. So once you're giving them the feedback, it really does help from time to time. Okay, and this was one that I haven't done, but have the buyer meet the 5 closest neighbors, having conversations with, reach out, meet the neighbors, include a term sheet with your offer. A term sheet, you guys, is great. It helps. Not all the listing agents have transaction coordinators. And when you have 20 offers in hand, a term sheet is really helpful. Not that it means that it takes away from the work that has to be done to review the offer, but having that term sheet in place is great. I love it. I present it with every single offer. One big pet peeve is I get no phone call, no questions asked on a listing, and just an authenticine over with an offer. Nothing. That, I don't know. I don't feel like it's a great presentation of your client. So the term sheet, cover sheet that highlights the offers, key advantages of your offer clearly shown. So this is conventional, 20% down. We're offering $670,000. We have a 22 AD of $40,000. We are potentially, if you're escalating the 35E, your escalation and that amount, kind of bullet those so that it's clear to see. And this is also a great place to talk about your lender, talk about your client. If your client hasn't done a love letter, just a brief snippet of, why they like the home, and, thank you for allowing me the opportunity to present this offer on behalf of my clients. And then the other big tip is you send that offer over, have your listing agent pick up the phone and give a call, or copy your, not your listing agent, your lender, have your lender, copy your lender on it, and make sure your lender responds with some information. Yes, this buyer is pre-approved, gone through underwriting, eligible for a quick closing, different things like that. I've even had some lenders pick up the phone and call the agent for me. And it's pretty cool, when you get that phone call and it's like, wow, I just got the offer over and your lenders just called me. So consider that as a big tip. And Sam is our preferred lender, one of our preferred lenders here at Best Choice Realty. And so Sam is going to also, on the lending side, just kind of give some information that might be helpful to us as well in this difficult, challenging market.
Okay, thank you. So before I jump into kind of some of the detailed stuff, I just kind of want to talk about what I'm seeing in the market in general. Excuse me. And everybody is talking about the offers where their borrower made an offer $200,000 above asking price and waived everything, and they came in second. Those are dramatic, but for every one of those, there are still 10 where the borrower is making a 3% down conventional offer, keeping with their contingencies and still getting that offer accepted. And why is that? Sometimes it's the house and the area, but a lot of times also it's the borrower and the agent. Right now, it's really important that you figure out that your borrower has a strong why. Why do they want to buy that house? They need to be motivated. One example, I'm working with a real estate agent who she refers me about 3 leads a week, which is great. They're not very good quality, really. Most of them are first-time home buyers and they have other, challenges, but one of them maybe not qualify. One of them is maybe a couple months project, but usually one of them a week I can get qualified in about a day. And I will email the pre-approval letter, let's say on a Wednesday night. And then in my back of my head is like, well, I'll probably never hear from them again in this market. 4 out of 5 times, she has a signed purchase and sale agreement in my email box Monday morning. It's amazing. And these are, again, 3% down conventional. Maybe they're waiving inspection, but they're having financing. They're only going 1 or 2% above ask price. How does she do that? Well, it's a combination of things. One is she's very aggressive, and you have to be aggressive in this market if you're a buyer's agent. She has total client control. And that's the hard thing. I think a lot of us in this industry, you're used to having a consultation with a borrower, and you talk to them about their hopes and their dreams and their wants, and then you throw on your real estate cape and you go out there and find them their dream house. That's not the reality right now. The conversation is more about, what are you willing to compromise on? What are you willing to sacrifice on your wish list in order to get a house? What kind of risk are you willing to take in your offer to get your offer accepted? And that's not a fun conversation to have, but you're going to be wasting their time and your time if you don't have that conversation. And you need to find out, what is their motivation? Are they in an apartment that they've been in for a year, and there's a family of 6 above them that make noise all day long and they have to get out? If that's the case, they maybe want to make some compromises and not, and settle, I guess is one way to put it. Back to that agent. The other thing that the reason she's getting these offers accepted, again, these borrowers have a very strong why. They are usually first-time home buyers, maybe residency issues, never thought they could get a house, and they're pre-approved, and they're so appreciative. They maybe have been living in a single-wide mobile home with a family of 5 because they never thought they could own. And her conversation with them, what are you looking for? They're like, we'd like a 3-bedroom house. We'd like to be in the Puyallup area. We want a house. And that's it. And that's very different than somebody who's like, I got to have a remodeled Craftsman with a view. And so these homes, I'm noticing, most of these homes are, they're like 1970s split levels that haven't been remodeled since they were built. Those homes, you're going to have a much better chance getting an offer accepted, a reasonable offer, without having to go nuts. She doesn't even show them the remodeled Craftsman in their price range because it's going to go 20% above their price range. And we're talking price ranges in the 350 to 550 range. Those houses are selling all day long. So just keep all that in mind. You'll save yourself a lot of time and the borrower. But if the borrower doesn't have a strong why, if they're not super motivated, you might be wasting your time. And I would never normally say that in other markets, but in this market, it's definitely different. So let me go through some of the things that Candace on her PowerPoint make some comments. Definitely with the listing agent, ask questions. There's some agents that are like, can you do a 20-day close? And I'm like, yeah, it's hard, but we can do it. And we have to pay for a rush appraisal. And they never ask the agent what the sellers want. And the sellers maybe want a 60-day close because they aren't ready. And you just hurt yourself by trying to do a short close. The rent back is becoming more popular. Fannie and Freddie guidelines allow for up to a 60-day rent back. The borrower has to move in within 60 days, and there's no amount, they can do it for free. So, throwing in a 30-day free rent back gives the seller a chance to catch their breath, like, oh God, I don't have to move in a weekend. And it's a nice little potential thing you can throw in there if they want. With escalation clauses, one thing, if you're not, personally, I hate them. I get why they need to be done sometimes. I think they're sloppy. I think there's room for fraud with them. And I think they get confusing. I've seen one recently where the escalation clause said that the borrower will pay $20,000 above the next highest offer. And that one was kind of a head scratcher, because if you're the highest, you don't necessarily need to go 20,000 higher. And if, let's just say, for example, if the sales price was 600, you were offering 650 with an escalation clause that said 20 grand. And let's say that the second highest offer was 640. You're still going to be at 650 because that's your cap. And in the seller's mind, they're feeling like they're getting ripped off, because you said you were going to go 20 grand higher, but you're only going 10 grand higher. So you're almost turning a positive into a negative. So again, every situation is different, but I don't know why you would go, maybe if it's $1 million house or $2 million house, but for a $600,000 house, 20,000 over the next is also kind of confusing, because the seller is going to feel like, well, they're not, why are they going that high when they can't go that high with their cap? So backup offers, I don't think a lot of listing agents are taking them right now, but that's, ask. I just got some interesting stats. These are national stats, so we'll be different here locally, but 6% of all contracts end up getting terminated nationwide. I think this is just the last, this is 2020. And this is interesting, the breakdown of that. 28% of those are because they lost their job. And that is probably way, way high because of COVID in 2020. But that was a surprising high number. The next highest is 11% are terminated because of the financing and non-job loss related financing issues. The tied for second is appraisal. 11% fell through because of the appraisal issue, and then 9% were terminated because of the inspection. And that's 9% of the 6%. So that means that less or just about 0.5% of all transactions are being canceled for inspection, which I think is probably historically really low, because most people probably aren't doing inspections. But especially if the agent calls and says, yeah, you were a close second, try to get a backup offer in there if you can. Let's talk about, if someone who owns a home and wants to buy a home, bridge loans and other options. So bridge loans, they're just not, they usually are somewhat of a square peg in a round hole. They're not super practical. One way to put it, there's a couple different ways that you can do them. The general bridge loan, though, is the borrower will get a loan for 70 to 75% of the value of their current home minus what they owe, and they can use that as a down payment on the new home. The challenge in that is the borrower now has to qualify for any loan they have on their current home. They have to qualify for the bridge loan payment. A lot of time it's interest only, and they have to qualify for the loan on the new home. So the little Venn diagram overlap of somebody who needs to get a bridge loan but can also qualify for 3 loans is fairly small. And the bridge loans are also usually can be kind of expensive. Lenders don't like them because how do you make money on a loan that's going to be, a month or 2 months? You do that by charging a big fee on it. So the borrower will look at it and say, well, this whole thing's going to cost me like 9 to 15 grand for a month. And I don't think I want to try something else. I have a bridge loan product that's a little bit different in that it takes the value of the new home, the value of the current home, you multiply that by 75%, and that number is how much you have eligible for the new home. So a lot of times there's no loan on the new home. It sometimes pencils out the same as the first example, but sometimes they can get a little bit more, and sometimes it's a little bit easier to qualify, but it still is expensive. So if the seller knows far enough ahead of time that they're going to list their house and sell, if they go out and just get a line of credit with the bank, like One Credit Union does a good job on seconds, just get a line of credit to 90%. You can go higher on a line of credit than a bridge loan, and it's going to be way cheaper. You can't tell them that you're doing this because you're going to list your house and buy a new home, you can't lie to them about it, but you also don't have to tell them, is kind of a fine line. If they ask for what the financing, what the funds are for, you can say for investment purposes, which is true. But you can't have your house listed. They won't do it if your house is on the market. But those loans are, the rate's lower. They're usually almost no cost. You know, it takes a month to a month and a half to get, but if they have the time, that's a better way to do it than a bridge loan. The other thing to talk to them about, or have me talk to them about, is what about if you put, you know, instead of selling your house and putting 50% down, you have enough to put 10% down of your own funds, and then you rent your house. We use that rent. We can use, you know, 75% of that rent to offset the payment, so you can qualify for the house price you want, and get into the home. And then you can decide, you know, if you want to keep on renting after that term's up, or sell the house, is another option. It may not work for everybody, but it is a way to kind of work around a bridge loan if needed. Let's see. The appraisal. So we're seeing more and more. I mean, I'll be in this business 29 years next month, and I have never had a borrower offer to pay for a low appraisal, or pay above the appraised value. But that's, probably 20-25% of most deals I'm seeing that on these days. And it's, you know, it's aggressive, but it's kind of sometimes is really needed. And there's two ways to structure that. One is, and I don't even, you know, I'm not a licensed real estate agent, so I don't know what the form names are, but one of them is where you are guaranteeing to pay up to a certain amount of a low appraisal. So if the house is 700, you're offering 750, you're offering to pay up to $20,000 of a low appraisal. If it appraises at 730, you're still going forward, but you've got to cover that 20 grand. Another way to do it, and this is, I think, stronger, but also riskier, and this is even newer, is offering to pay $20,000 above the appraised value, or your offer price, whatever is higher. So that way the seller knows, they know what their floor is. They know they're going to get what your offer is, or they're going to get 20 grand. They're going to get $20,000 more than the house is worth, no matter what. They don't have to worry if it comes in low. And the borrower is at a higher risk. They have to make sure they have the money, but that is a little bit cleaner. Does that make sense? We kind of
A little bit.
Okay. So again, the first offer is they're offering to cover a fixed amount of an appraisal that comes in below. That gives the seller some satisfaction, some assurances. The other one is they're guaranteeing to pay 20 grand above the appraised value, no matter what it is. So if they offer 750 and the appraisal comes in at 740, they're paying 760 for that house. It's a really aggressive offer, and we're seeing more of that. So I do want to talk about, if somebody is going to do that and they don't have $1 million in the bank, where do those funds come from, and how do you calculate it? And I do this pretty much automatically for any borrower I'm pre-approving that's putting that has more than 5% down. Is you run the pre-approval, you qualify them with the highest mortgage insurance that was possible, and you get back to them and say, okay, you know, you've got enough to put 15% down, so you're qualified for a sales price of 470 and a loan amount of $400,000. You know, and then if they can find a house under those terms, great. If they're going to include any addendums about covering appraisal cost differences, where does that money come from? So how you can calculate that, and instead of maybe memorizing this, you can just call me, but it's a fairly simple formula. If you take the sales price they're qualified for, which is 470, you subtract the you subtract the loan amount divided by 95%. So let me back up. So if the sales price is 470, loan amount 400, that's with 15% down. Take that $400,000 and divide that by 0.95. And then you subtract that number from the original sales price. So in the original example, if the sales price is 470, loan amount 400, you multiply 400 by 0.9 or divide 95% into 400. That's 421. 470,000 minus 421,000 is $49,000. So the borrower could potentially cover $49,000 of a low appraisal and still qualify for the loan. They're going to have less equity in the house because their down payment now is 5% to the 15. Their payment's going to be a little bit higher because the mortgage insurance will be higher, but they are getting into the house basically on close to the same terms. They just don't have the same amount of equity. So does that make sense? There's different ways you can phrase this and structure it, but that is anybody who, especially the sweet spot is people who are putting like 10 to 20% down. You can do these calculations and let them know the amount. If they have the money in savings or somewhere else, you don't need to do this. But if they don't, and they really feel like they need to do the appraisal waiver, they can basically do that by us adjusting the loan amount. And that's kind of confusing. I probably should have did something in writing so you can see it. If you want more information on that, just email me and I'll do you a little spreadsheet on it. What else? As far as contingencies, I'm not seeing almost nothing is coming through that has an inspection contingency. There are exceptions, but really encourage your borrower to try to get a pre-inspection or just take that leap of faith. And again, I never have said that in 30 years. It's just I hate having borrowers not do that. But it really you're really sellers, think about it. If you're a seller and you've got a dozen offers and this one's super high, but it has an inspection contingency, well, what's going to stop them from coming back, with asking for money? And Candace, one of Candace's examples was kind of a take it or leave it inspection. That is better than nothing. But most of the offers I'm seeing come through, they've done a pre-inspection or they've just had their uncle who's in contracting walk through and there's just not an inspection. And I hate that. But it's kind of one of the things that makes a big difference. And my other piece of advice is if the buyer is waiving any contingencies at all, I would recommend sending them an email with the pros and cons of doing that. Because if you have a kind of a casual conversation about, waiving your inspection is probably a good idea, it kind of needs to be done a lot in this market, and they do it, and they find out that the foundation is bad and it's going to cost 80 grand, well, you're probably going to end up in court. If you have an email in writing saying, these are all, waiving your inspection is an option, and it can strengthen your offer, but here's all the potential things, that can happen, you need to be aware of, you're more protected in that situation. So that's just my personal preference is if you're having conversations about waiving anything that protects them, do it in writing and make sure that you're listing the potential negatives.
Can I pipe in for a second, Sam? So this is fresh off the press too, this last week. Candace mentioned this. We just created, and there's been a couple that have been circulating from other brokerages as well to directly address this, is to have information available to your buyers, going through what does that mean when you waive your financing? What does that mean when you waive your appraisal, title, inspection, all of those different things. So I'm going to put up here on the screen just so you guys can have a sneak peek of this. We've mailed this to all of our brokers, and it will also be available on Transaction Desk by the end of the week. But in essence, it goes through these very, very real examples that Sam kind of went through. What does this mean? How does this impact me as a buyer? and it's very easy to read as a consumer. And it also, the reason we're putting it on transaction desk, so brokers that are using this, they can truly use this as a disclosure and have their buyer's initial for your protection, because it is risky business. When you waive anything, it opens the door to possibilities down the road. So for your protection, we've provided this, and many brokers with Best Choice have requested something like this. And so we've provided this as a resource for you guys.
Yeah, that's a great idea. So also, I'd like to get your take on what I'm going to say here, because again, I'm not a licensed real estate agent, but I am seeing borrowers who are waiving their financing and they're still including a financing addendum, just saying financing is waived. If you're going to waive financing, why wouldn't you just not have that addendum at all? Then the seller doesn't know if it's a cash offer or not. Because if you're waiving financing, you're waiving financing. Do you need to have that addendum in there?
As real estate agents, you can just remove it from the form. Some people cross it off. As a comfort for me, I would certainly disclose it to that agent. Some people, they write it in a 22EF evidence of funds addendum saying, I need a loan in order to buy this. The evidence of me having essentially waiving my financing is that I have to have this done. But then by just removing it from the form, there also is the consideration of the appraisal. I mean, there's embedded language in there allowing the appraisal to be completed. So there's proper ways to do that. I don't really want to tell people to use this form, use that form, just because the forms are changing March 3rd. So I would just certainly stay tuned. We've got classes coming up over the next week or so from the MLS, but also from Best Choice directly, where we kind of go over those different things. I wish I could tell you one way or another, but it is going to change. So I could say one thing, but then, a week from now, it will be completely outdated information.
Okay. So a couple other little just ideas and tips. And so, it is, and this is obviously self promoting, but it is very important to use a good lender that you can get a hold of in this market. I mean, if somebody comes to you with a pre-approval from, Wells Fargo, it really is a red flag, and it's a strike or two against the borrower. And I get calls all the time, Friday at 8 p.m. and Saturday, hey, we just made an offer, can you call the listing agent? And I do, no problem. Or, hey, we're approved this way, we need to restructure it and needed a new approval from you, and you're not going to get that from an internet lender or a bank. And again, being nimble is really important. And it's also important that your loan officer is experienced. If they're calling the listing agent, a good listing agent can trick a loan officer into giving out a lot of information that they shouldn't. I mean, you don't want a loan officer who is negotiating against your borrower. I mean, a lot of the times I'll talk to the agent, and there are the pre-approvals at 500, the offers at 500, and they'll say, well, can they go higher? And it is extremely inappropriate for me to say yes, because that is, again, I'm negotiating against my borrower. So the answer in that case would be, well, it's not my place to say. The borrower does have, flexibilities, but 500 is their offer, and they're very qualified for 500. Give them some hints, but you got to be careful. And there's other things that you can't say just for compliance reasons. And then also something that a little tip that somebody mentioned, I think is a great idea. When you have these houses, I've had this happen where there's a dozen offer, it's been on the market for a week, and they're accepting offers at noon on Tuesday is the deadline. And their agent sends in the offer, and they say, hey, I just sent the offer in, call the listing agent. I want to call while it's in there, and I'll call at 12:05. And they have no idea. They haven't seen the offer. They don't know who I am. They don't know who the agent is. And sometimes they're thankful for the call. Sometimes they're just kind of flustered, and they're just, I'm sure that they just, have no idea what we're talking about. So I think having the buyer's agent, yourself, and maybe me, a video text is a great way to get their attention. So I can do a video text on my phone and just say, hi, this, I can mention myself, I can mention you, I can mention the borrower, when the offer went in, I can explain the strengths of the offer without them coming back with questions that we may not want them to ask. And they have a permanent record of it. So they may look at it and pause it and then come back 4 hours later to look at that. And it's unique. I mean, I don't think a lot of people are doing that. So little things like that to get attention can't hurt. So the other thing, I just maybe from the other idea, the big tip, if I was a buyer's agent right now, and I had 2 or 3 borrowers, I couldn't get their offer accepted. What I would be doing is looking for off-market sellers. And I think Ricardo's on this call. He did this for a mutual client of ours who the borrower had made 2 or 3 offers, and he was going super aggressive to the point where I was uncomfortable for his qualifications as far as waiving things and going higher. Ricardo found him an off-market sale, and he still was able to get the house he wanted at the price he wanted without having to really, risk a lot by doing a lot of crazy contingencies or waiving contingencies. And getting those kind of leads, it's not, it's just a matter of thinking strategically and working hard. So what you would do, you take your borrowers, what do you want in a home? Price, bedrooms, area. You do a search for homes, not listed, just homes. And I think you can do that through the multiple, but if not, a title company can do that for you. They'll charge you a couple cents per result. And let's say you've got 100 homes in this area that fit. I would go through it and eliminate anything that's maybe a year or 2 old, because they're not going to want to sell after they've been in there for a year. Eliminate things that the borrower wouldn't want if it's on a busy street maybe, or a certain style. Get it narrowed down to like 70. I would then send that list to the buyer and say, hey, here's what I'm doing for you. Can you look through this list and eliminate anything that you wouldn't be interested in buying if you had the chance? And also let me know your top 10 or top 20 favorites. And I am going to do a mailing to everybody on this list advocating for you to try to get you to buy this house off market, or, and your top 20, I'm going to go knock on their door and advocate for you. And, worst case in this scenario is you can't find anybody, but you've made some contacts and your borrowers think you're a hero for making the effort. That's a worst case scenario. Best case scenario is, on your 3rd door you knock on, you find a seller that's like, yeah, I was thinking about selling, and I didn't know my house was worth that much. Yeah, just send me an offer. And a couple of weeks later, you get a couple other sellers who, kept your card and call you up and have want to list the house or want to sell it off market. It's a lot of work, but it really, I don't know if Ricardo wants to talk about it. Maybe at the end we can do that. But I love that idea, and it really allows the borrowers to get into a house without having to really go nuts with some of that competition. What else? So I think we're okay. So I'm going to real quickly talk, we mentioned this in the flyer about, countering some competition, some niche competition that you're seeing out there. And there's all sorts of competition as buyer's agents. And I just want to really quickly kind of go through a couple of them. Like, one would be like the big internet companies. And maybe you've been working with the borrower for a couple of months, haven't found anything, and like, well, I think this internet, these guys have a pretty slick kind of a system. One of the counters to that is, yeah, that's a very successful company, but if you look at their mission statement, they are a online data compiler. That is their business. They're not a real estate company per se. we are a real estate company 100%. And just as an example, if you had legal troubles and needed to hire an attorney, do you want to use the young attorney who's got rich parents who has the $50,000 website, or do you want to use the attorney who's, you know, in the same wrinkled suit for 20 years that has an office that has floor to ceiling law books that are well worn, who doesn't have time to, you know, for all the fancy stuff because they are busy advocating for you? Because that I am the latter, and that's our specialty. Another potential competition is like the big team, like they're deciding they want to go work with, you know, Joe Realtor and his team, and they give him this slick pitch. So they're closing 80 houses a year and all these things, and you're thinking, oh my gosh, how do I compete with that? Well, the counter to that is, oh yeah, yeah, I know him. They do a lot of business and have a good system for the right person. But you know how they close that many loans is Joe has 3 or 4 junior agents working under him with a lot of turnover because it's a lot of work, and the really good ones, quite frankly, move on because they can make more money. So if you go with them, you're not going to be working with Joe other than your initial meeting and maybe at closing. You're going to work with a much less experienced agent and maybe a team of agents who may do fine. But with me, you know, I've had the blessing that I have a very good work-life balance. I am as busy as I can handle with handling my own business, and I also can do family work. So if you work with me, you're going to work with me on every step of the way. And you know my experience already and my communication skills. And I quite frankly think that you'll have a better experience with me. Another one is like a boutique office. Maybe there's a little corner real estate office on a busy street, and you go in there and they give you the cappuccino, and on the wall they've got like a map of the neighborhood with pins in every house that they've had a transaction in, and it's impressive. The buyer comes to you and says, yeah, I met with these guys at, you know, West Seattle Realty, and they really know the neighborhood really well, and I think I have a better shot with them. Well, the counter to that is you're right. If that's the only market, they probably have a better inside track. But you also mentioned you were interested in, you know, Ballard and Fremont and Crown Hill and you know, Georgetown. With Best Choice, we have a network of 320 agents all over the county, and we're communicating and sharing ideas and sharing information. And you'll have a much better chance getting a home if you use that. I mean, you know, West Seattle, you know, in your price range, I just looked it up. There's one house right now on the market in your price range, and I already showed it to you, and you didn't like it because it was on a busy street. So you're limiting the potential home choices by 80% by staying in just West Seattle. So if you decided you just want to stay in West Seattle and are willing to risk not getting a house at all because there are no houses, they may be a good choice. But if you really want to have the best, you know, search for all these areas, I think I'm your choice. And then the newer one coming out now are these real estate companies that will pay all cash for the house. I came up against them last week and learned a lot in doing this. Like Fly Homes, Fly Home is gaining some traction. So these were borrowers from a Best Choice agent. She'd been working with them for like 8 months, and they came to me and said, yeah, we think we want to do this Fly Home loan all cash. We just can't get an offer accepted. What do you think? And I kind of coached them back and forth, and they were very thoughtful and analytical, and they just couldn't make up their mind. I'm like, tell you what, let's do a conference call with the Fly Home broker and the loan officer. So we did, and we asked some questions. And the thing about Fly Homes, which is, I think, to our advantage, is it's very opaque. They don't give you hardly any details. It's just like, you get qualified, we'll buy the house for cash, and then you pay us back with the refi later. And that's about all the information they give. And for some people, that's like, great, where do I sign? But if you're kind of analytical, it's not good enough. These people were analytical. So in the call, you know, we asked what the costs are, and they're like, oh, there's no fees for the program. And I'm like, well, so they're still doing title and escrow and recording, and sometimes appraisal if they're paying all cash, correct? He's like, yes. As well, they're going to have to pay all those fees again when they refinance in a month, right? And he's like, well, yes. And then the other question was, so the all cash is a loan to the borrowers at 6%, correct? And he's like, yes. I'm like, okay, 6% is pretty generous considering, but just so you know, borrowers, if it takes you like 2 months to close on a new loan from when you buy this, you're going to spend about $3,000 more in interest than if you got a normal loan because the rate's higher. And this is on a loan of maybe 500 grand. And then, you know, we got off the call, and I also mentioned to them that, you know, refinancing, there's a Fannie Mae add-on to refinance of a 0.5 point. So you're going to pay a 0.5 point higher in fee to do a refinance loan than a purchase loan. That's going to be about $3,000 in your case. So if you add up the double costs and the interest and the higher fees, you're going to pay about 8 or 9 grand more for this program. And maybe you can get the house for cheaper for all cash, maybe not. But the other thing that you need to keep in mind, these borrowers only had 10% down, and they were going above price. So if you buy this house, you know, a $700,000 house, and you buy it for $770 all cash, you have to refinance that later. If the appraisal comes in at $710, you now have to get a loan on a house worth $710 that you owe $770 on. So you've got to put 5% down on that $710. You've got to cover that cash shortage, which I don't think you really have right now. And there's also the wild card that if something happened, if the market turned or if you lost your job, they start the foreclosure process after 6 months. They don't hide it. You have to pay that loan off in full in 6 months, or they start the foreclosure process, which is kind of scary to hear those words. So after all that conversation, they were like 90% going to do it. But after I never told them what to do, but after you give them all the information, they're like, yeah, you know what? We're not going to do it. We just don't think the extra costs and risk are worth it. And they didn't. So they're still working with the same original agent. So those are some counters there. I think we're running up on full time. Does anybody have, I can stay longer if anybody has any questions. If you want to type it in for chat for Shannon, or if you just want to unmute yourself, we'd be happy to tackle any specific questions or situations.
I've got a question for Candace. So Candace, have you or agents you've talked with, because I know you talk with a lot of our brokers, how many people are winning on some of these backup offers? I mean, are they common? Should we start really pushing for that if you're not outright accepted?
I honestly haven't heard a lot of wins on backup offers, but I actually kind of have not necessarily a backup offer, but one on something similar, and not sure how the situation went, but I would definitely recommend it, especially as challenging as it is. A backup offer does not keep you from being able to go out and still search homes and make another offer. So in that sense, absolutely, especially if it's somebody who, if you were, runner up and you got the feedback that, because actually on the listing side, I'm hearing a few things. So not that everybody is, there's a ton of them, but it is happening. I think, Sam, you had the number about 6%. So the chances of it are not huge, but in this market where I'm seeing agents that are making 24 offers for one client before something, I would definitely put that energy into leaving one as a backup if it's accepted, right? Going into backup position, I have probably over the course of this last 5 years, I've had at least 4 that I can count of that happened by way of backup. And then this one recently, I was told that we didn't make it, and I don't know if she made an error, but later on, it was We did. So initially told that we were beat out, and then not too long later, it was actually, you're good. And so we're moving forward. But I would highly recommend backup offers, 100%. It cannot hurt. It does not hurt. And if you do find one and you wind up in contract, it's a simple email and request to remove your offer, withdraw.
I think it's worth a mention too. I mean, there's a lot of newer brokers that are in the industry now. And some of them, they don't even know what a backup offer is. If they're listing a property, sometimes if you've done your research and you see that they are newer, it might be worth a mention. Are you considering backup offers? You know, if you don't outright accept my offer, would you be open to us being in backup position? Would be something I would certainly ask. And I think asking that listing agent, if you don't win it, I would certainly ask for feedback, right? You know, what could we have done better to make our offer stronger? Was it price? Was it terms? You know, asking for that feedback, I think will be helpful, especially so you're not writing. I think Candace told me the other day that an agent put together 24 offers until one got accepted. So if we can mitigate that and get it down to not nearly so many, you know, asking for feedback. And we're in a cooperative MLS. People will help. All you have to do is ask.
Right, right. It looks like Shannon is wanting information on the bridge loan. Is that for the manufactured home? And then also vacant land loan information. Okay.
Okay, yeah, I can send you specifics on the bridge loan. Vacant land, you're gonna want WaFed, Washington Federal. They probably do half of those loans out there. They're the kind of the big, that's their specialty. And I think it's 20-30% down on a 20-year loan. The rate's a little higher, but not terrible. There's also smaller, like 1 or 2 branch banks and credit unions can sometimes be a good source, but WaFed for the land. I will email you more information on a bridge loan. Yeah. So one other thing that while I got you, so you may have seen these around at the real estate offices. I've been told the March edition is going to have some information specific to buyer's agents and challenges in this market. So these usually get distributed to the 3 different branches by the middle of the 2nd week of every month. So I would say by Thursday of the 2nd week of March, they'll be in the office. So swing in and pick them up. There's a lot. If you haven't seen them, there's good information in here. It covers a lot of things, and we usually have a few extra. So I'd love everyone to use them as a resource.
Yeah, I think I'll piggyback on that. I mean, it's a lot of material, a lot of really, really good material. All you have to get is 1 or 2 nuggets, and I mean, you'll start getting your phone ringing. I think they have really good social media kind of tips, things to kind of get on there too. So if you're looking to kind of boost your business in that way and kind of get the pipeline rolling for the next couple months, that might be something to help as well.
And congratulations, because it looks like Barb just said that she won because the loan officer returned the listing agent's call and supported the strength of the buyer. It's huge, guys. We got to do a little bit more work in this market. It's huge. Having that extra phone call, having those conversations with the listing agent, doing your best to build rapport. I had one where I was calling, couldn't get through, sent a text, no response. Come to find out, her phone had been like ringing and texting off the hook, is what she said. And I just thought outside of the box. I said, how can I get her to respond? And so I knew that there was a review date, and I just did a little reverse psychology, and I just texted her and I said, hey, are you still going to review offers tomorrow? Do I have enough time to get my offer over tonight? Well, I knew she had posted for like 3 days out, but I wanted to do something different to get a response. And that's how I had to do it. And that she actually called me as opposed to responding to the text. I got a phone call. And so think outside of the box, make the phone call, make the text. I know I'm even seeing now on some listings, it's like, don't call, don't text, highest and best. I get it. And those are not the ones that I'm talking about, but the ones that don't say that, find out who the agent is, and, you know, make your phone call, present your offers, find out what the sellers want, and let's get some deals closed, because I'm sure it's very exhausting for all of us right now. So hang in there, get the feedback, share with your clients the feedback too, because that helps them to come up and do better, or realize sometimes it's hard. It's a hard conversation. It's realizing right now you might have just got pushed out of the market. I know I've had conversations with agents that is happening. And so that's a tough conversation to have, but you know, hang in there, guys.
So I see She's question. I'm not sure if you got my Fly Homes little pitch, but if you came in late or missed it. So in just like a 1 minute summary, if you're competing with Fly Homes, the thing that I did to overcome that was pointed out that there's $1,000 to $2,000 in double fees you're going to pay for buying the home and refinancing it. They're going to pay $2,000 or $3,000 more in interest on the kind of the bridge loan that they're getting. They're also going to pay, $2,000 to $3,000 more for the cost of a refinance for the same rate on a refinance. So that equals $7,000 to $9,000 usually. And then if they're doing the Fly Home loan because they don't have a big down payment and they're going above the ask price, they're taking a huge risk, because if the appraisal on the refinance comes in below, well, it will come in below most likely what their offer is, especially if the market is turning, they still have to do that loan. And they may be looking at having to do 100% financing somehow and maybe stuck on a really bad loan. And Fly Home Loans doesn't mess around. They want that loan paid off in 6 months or they start the foreclosure process. Those are the counters to it. And quite frankly, in some cases, Fly Home Loans may be the right option for some borrowers, but it's definitely not for everybody.
That's good. So basically, you said on about a $500,000 purchase price, they're paying about $6,000.
It's a little more than that. They're paying 15 to 2 on the double cost. They're paying about $3,000 in extra interest, depending on how long it takes to close. And then they're paying about a half point on the loan amount and fee hire, which is $2,500. I think that's about $8,000, I think, or $9,000.
$500,000. And then in addition to, they have to make sure that, based on where they landed on this home, that it does appraise for the refi. Otherwise, they're stuck in this high interest loan.
The other thing I forgot to mention, if you're doing the Fly Home option and you don't waive the appraisal, your offer is not as strong as you think, because there are other offers that are waiving the appraisal. And quite frankly, the sellers right now, their biggest concern is, am I going to actually get that price if I accept this offer? They're not worried about, is this borrower going to be able to close, because there's 12 other offers in line. So quite frankly, I would take an offer with financing that waived the appraisal or guaranteed the price over an all cash offer that still was contingent on the appraisal, personally. So if they're going to go this route, they probably have to go all in and waive the appraisal also. And unless they have a lot of money on the side, it's really risky, because if they can't refinance after they buy that house, there's some stress they have to deal with.
I agree, Sam. I just helped another agent look at their offers, and one was cash, had appraisal and inspection. They went with the VA financing, which was almost apples to apples, but had a little bit for low appraisal as well as waived the inspection. So, well, hopefully this was helpful to everyone. If you have any further questions, you can reach out to myself, Sam, as well as Shannon. Thank you so much.